Today, we will talk about how to get started in real estate investing. Let's have a look at the details. Investing in real estate has become a popular way of building an investment portfolio. Historically, real estate investments perform better than some other kinds of assets. It also presents the prospective investor with several different options. To get into real estate, you can become a landlord and purchase the property yourself, but can also make money by buying into a real estate investment trust or lending to other real estate investors. The first step is becoming a landlord. Take stock before you invest. Investors should know how they intend to dispose of any property before they buy it. Analyze the profitability of available properties. Before diving into the purchase of a property, make sure it is going to be a profitable investment. Evaluate your operating expenses and the amount of rent or income you expect to receive. Arrange financing. First, you will likely need to put down a large percentage as a down payment. Many commercial loans require between 25% to 35% down payments. Shop for a property. Starting by looking at the properties listed on the MLS means multiple listing service. You can find the MLS listings on websites like Realtor.com, Trulia, or Zillow. Make your offer. Work with your real estate agent to determine a fair price for the property. Find tenants. Advertise your property for tenants by word of mouth, flyers, signs, print ads in local newspapers, and online ads on real estate websites. Screen applicants. You are able to screen rental applicants according to disqualifying criteria. These can include credit score, gross income, criminal history, and rental history. The second step is purchasing shares in a real estate investment trust. Understand the meaning of real estate investment trust, REIT. REITs are companies that own or manage commercial real estate. They allow individuals to profit from real estate income without having to purchase commercial real estate. Choose a type of REIT in which to invest. REITs in each industry have their own way of earning income from real estate. When choosing a type of REIT, evaluate the strength of the overall economy and how that industry is performing. Purchase shares in a REIT. Contact a broker or financial planner to find the right REIT investment for you. And the third step is lending money to other real estate investors. Understand the meaning of private money lending. Private money lending means lending your own money to another investor or to a professionally managed real estate fund. The loans you make are secured by real estate. Identify borrowers. Private money lending is becoming a significant source of financing in the real estate industry. Mitigate risk. Evaluate potential loans to see whether they are going to be profitable investments. Generate the proper loan documents. The paperwork involved in a private money loan is similar to that of a typical loan from a bank. The borrower must sign a promissory note, which is a promise to repay the loan. Check with your lender to determine their requirements. Thanks for watching this video. Please don't forget to like and subscribe to our channel if you like our videos.